Stocks can be categorized in various ways based on company size, sector, growth potential, and other characteristics. Here are the main types of stocks with examples. 1. Common stocks. Definition: the most common type of stock that gives shareholders voting rights and the potential to receive dividends. Example: Apple Inc., AAPL. Shareholders can vote on corporate policies and may receive dividends. 2. Preferred stocks. Definition: these stocks give shareholders priority over common stockholders in dividend payments and asset claims, but usually lack voting rights. Example: Bank of America preferred stock often provides fixed dividends, making it more stable but without voting rights. 3. Growth stocks. Definition: stocks of companies expected to grow faster than the market average, often reinvesting profits rather than paying dividends. Example: Amazon, AMZN, known for aggressive growth and reinvesting in expansion rather than paying dividends. 4. Value stocks. Definition: stocks that are undervalued by the market, trading at a lower price relative to their fundamentals, PE ratio, etc. Example: Coca-Cola, KO, often trades at a lower price and is seen as a stable company with reliable dividends. 5. Dividend stocks. Definition: stocks that consistently pay dividends, typically from well-established companies with stable cash flows. Example: Procter & Gamble, PG, known for regular dividend payments, appealing to income-focused investors. 6. Blue chip stocks. Definition: large, reputable companies with a history of solid performance, financial stability, and regular dividends. Example: Microsoft, MSFT, a well-established, financially stable company known for steady returns and dividends. 7. Penny stocks. Definition: stocks trading at very low prices, typically under $5 per share, often from small or emerging companies and considered high risk. Example: Zomedica Corp., Suom, a low-priced stock with high volatility and risk, often favored by speculative investors. 8. Small cap, mid cap, and large cap stocks. Small cap, companies with a market capitalization between $300 million and $2 billion, often with high growth potential but higher risk. Example: The Joint Corp., Giant, a smaller company in the healthcare sector with growth potential. Mid-cap, companies with a market cap between $2 billion and $10 billion balancing growth and stability. Example: HubSpot, HubES, a medium-sized tech company with a steady growth record. Large cap, companies with a market cap over $10 billion, usually more stable with lower growth potential than smaller stocks. Example: Johnson & Johnson, J&J, a large established company with steady performance and dividend payments. 9. Cyclical stocks. Definition: stocks from companies whose performance is tied to the economic cycle, doing well in economic expansions and poorly in recessions. Example: Ford Motor Company, F. Demand for cars often rises in economic booms and drops in recessions. 10. Defensive stocks. Definition: stocks that remain relatively stable during economic downturns, typically in sectors like healthcare and utilities. Example: PepsiCo, PIP. Consumer staples companies usually have steady demand regardless of economic conditions. 11. IPO, initial public offering. Stocks. Definition: stocks of companies that are newly listed on the stock exchange, offering shares to the public for the first time. Example: Airbnb, ABNB, went public in December 2020, allowing retail investors